Okay, welcome to the accounting class. Today we have a problem where we are asked to prepare. Okay, we are asked to prepare a financial statement of equity for a company named FinTech Manufacturing, and at the same time we have to determine the account balance of the capital account as of December 31st. That means ending period. Okay, and to be able to prepare the financial statement of equity, we are given those data. We know the capital at the beginning of the period, January 1st. We know the company made a profit. We know the owner put more cash in the business if it's a small business, and also we know the owner took some money out. And from that information, we're going to prepare the statement of equity. But before we do so, we have to keep in mind that there are four financial statements. Okay, the first one is the balance sheet statement. The second one is the income statement or P&L. Number three is the cash flow statement, which is very important. And the number four, that's the one we being asked. Mhm. Retain earning statement or statement of equity. Okay, so now this is what we're going to calculate, prepare. The statement of equity. Mhm. You have couple of main element of that. You have to prepare a statement of equity. You start with the capital balance at the beginning of the period. Capital for January 1st. Okay, January 1st, the capital balance was 35,000. The company during the period January 1st to December 31st, the company made a net income which is a profit of 15,000. You add mhm, net income, which is 15,000. Okay. The owner added more money, make more infusion of cash, $9,500. Add contribution, 9,500. Yeah, 9,500. At the same time, during the period, the owner took out $4,000 less a drawing, $4,000. Now 24 a 24.5, okay, minus 4, that's so you have 20,500 left. So this is an increase in capital, 20,000. Now at the end period, which is capital December 31st, is going to give you 55,500, which is the value. Okay, the business made some profit, and this, so the capital of end period is 35,500. So with that in mind, we have our answer over here, which is number two, 55,500. So this is very simple. It's not a lot of calculation to prepare your statement of equity. I know a lot of small business owners, they usually use QuickBooks. Once you enter the data into QuickBooks, and QuickBooks make that calculation for you. But it is very important that you know how to prepare your statement of equity without even using a QuickBook. Okay, so it is very important. So this is very simple, and once you know how to prepare it, and you can prepare it all the time. So this is what I have for today, and so please like and subscribe to our channel, and so we'll see you in the next video. Thank you. Bye bye.